You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means it is Education Wednesday. Once again, time to unleash the premier options educational program. Yes, it is time once again for Options Bootcamp. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever scintillating network, reminding you there are a plethora of ways for you guys to enjoy this content. Of course, on demand on pretty much every platform under the sun. YouTube, Audible, Google Podcasts, Apple, Stitcher, Spotify, all that fun stuff. Podbean, you name it. There's a platform that carries the major shows. We're on it. And of course, if you guys want to get a little bit more engaged with the content, want to check out this show live as well as everything else we do pretty much live throughout the week, then of course the plus is for you. And if you want to go above and beyond, awesome Q&A yesterday with Jack Schwager, aka the guy who created the Markets Wizard series. Probably you guys have stumbled upon one or two of those books. They've been around for, I think, 3 decades now. That was pretty awesome to have him in there answering your questions, as well as he also runs Fundseeder now, which is, of course, a company that actually backs smaller, unknown traders out there. So intriguing on multiple fronts. If you missed that one, head on over to theoptionsinsider.com/pro. If you sign up there, you can check out all the archive ones and, of course, participate in all the upcoming ones. We have an awesome one coming up. We had our buddy, the short vol legend himself, Mr. Don Schlesinger, on one of our early pro Q&As. But he's also, when he's not slinging the short vol, he's also a legendary blackjack Hall of Famer. I mean that quite literally. He ran a super profitable blackjack crew for a number of years. He has repeatedly told me many times that blackjack is the most profitable legal activity you could do per minute in the world. He stresses legal out there. So a lot of you said, hey, can we get Don back on to do a special, cool, one-off, super in-depth, super exclusive, all blackjack pro Q&A, and Don has agreed. A lot of you guys have been asking us for it since then, so Don is going to do it. I do believe we're going to do it next week. So this is a one-of-a-kind opportunity. Guys, he's an author. He's a Hall of Famer in blackjack. He is asked to speak on this in very prestigious locations on this topic. So you get a chance to pick his brain. I'm not talking splitting aces. I'm talking serious card-counting blackjack. So if you have questions, start getting them in now, because Don has been asking me, what's your knowledge level? How deep, how hardcore should he go? So hit us up. I know a lot of you are excited about that. So that's just one of the many awesome things you can access on the Pro Front. Listeners. Of course, you get the oddities every Friday. I see you there in the chat there, Nichols, asking about, what was the name you were just asking about for oddities? Oh, I just saw it in the West. Oh, CNQ. Is that going to make oddities this Friday? You got to tune in to find out. But if you want to submit that to the suggestion box for Options Oddities, of course, our unusual activity show, have at it. We can add it to the list, and then we'll see if we have time. We have so many things to get to on the show. And speaking of time, let's get him on because he's excited. He's champing at the bit to get at you folks. He is the black-hatted one himself, a.k.a. also the author of 1 or 2 or half a dozen options-oriented tomes, none other than Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the program. How excited are you for some blackjack Q&A, sir?
Yeah, I'm really excited about the blackjack one. That's going to be really interesting, man. I can't wait to check it out.
Since you're on our network, I might even let you submit a question or two if you want. So if you have a question, again, not just splitting aces, but this is because he gives lectures on this stuff. He just did some crazy mathematical and blackjack lecture recently, so he's super hardcore. But if you want to go deep down the rabbit hole of what he claims to be the most profitable legal activity per minute, have at it. But you know what else is also a fairly profitable and also just generally fun per minute activity? It's the old options trading. So let's get to it. But before we do, Mr. Dan, we've kind of checked in with you at the beginning of the show, usually talking about what's going on in the markets. I guess we can maybe even rechristen this segment now because you're Mr. Meme Straddle. What are the latest meme straddles on your radar over there at MTM, sir?
Oh man, we've got actually something really exciting happening. I have a webinar coming up tomorrow night, actually, and it's all on trading short squeezes, trading meme stocks, and it's going to be really great. You can register for it by going to markettaker.sq. That's short for squeeze. Markettaker.sq. I believe that's how we do it. And join us tomorrow.
I'm trying to remember what some of the names you were slinging on the episode last time. Were you into support? Were you one of those guys?
I was. I had a number of them. I was talking about Root, which was interesting.
Root, that was the one. I knew it was something R on there, yes.
Yeah, that was a cool one. SOAC, I believe we talked about, if I'm not mistaken. That one just killed. So, I'm going to teach you everything you need to know in order to get started and take the next step and start trading some of these short squeezes. So just join us tomorrow, markettaker.com/SQ. It's free for all our listeners.
Man, heck of a week coming up. You get Meme Palooza with Dan. If you go pro, you get the Blackjack Q&A. And then, of course, we're going to get into some fun options basic training right now.
All right, Boot, it's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? Yes, sir. You're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me? Yes, sir. Pull in, prepare to learn. Yes, sir.
So festive. It's always 4th of July or Memorial Day or Flag Day. Pick your patriotic holiday of choice there whenever we're doing the old options boot camp program. And, you know, Dan, you like to take the pulse of the audience out there because you people always have interesting things on the brain, and they do seem to ebb and flow in different waves, and not often the way I would think they would unfold. Like we were talking about weeklies recently. People have obviously had memes on the brain quite a bit and all the things that go along with that skew and everything else. The money calls has been a big topic of discussion, but also seems like a lot of you folks have basics on the brain again, like things like exercise and assignment, which again, you know, these are not always the sexiest things. You don't lead with exercise and assignment all the time. But on the flip side, if you don't understand how they work, it could be a little bit surprising and dangerous to your portfolio if you don't get all these mechanics. Again, if you want to deep dive into kind of some of these fundamentals of how automatic exercise works and what assignment, how that works from your positions, from a long perspective, from a short perspective, all these kind of things, then go into the archives of the show. The show's been around for a while, listeners. You can go back, check out the archives. We have done deep dives into this in the past, and you can enjoy those at your leisure on demand wherever you get these shows. But interesting, we had a couple of questions roll in recently about this topic. This one kind of leapt to mind for me, Dan. This one came in from JFO363. He or she saying, I'm a little confused on options assignments. He says, hello, I started trading options back in August of 2020. So I guess that makes him a veteran in this market, Dan, because most people started a couple of months ago, right? If you go back to August of 2020, you're a pro now, sir. He says, Options Bootcamp and the other Options Insider shows have played a primary role in my understanding of options. Well, we are very happy to have helped you out there, JFO, and everyone else who writes in similar stuff. You know, I see the numbers. I know people listen to these shows. I know a lot of you out there enjoy and get a lot of value from these shows. But still, whenever I hear these comments, it still affects me, even 15 plus years later, almost, of having done this out there. At the end of the day, that's the reason we're doing all this content. Make you folks better, smarter, safer, just better traders in general out there when it comes to understanding what's going on, being able to roll and adapt with the punches. Don't get married to certain positions. All the things we've talked about here on the show many times. So we're very happy to have helped out JFO. He says, since August of last year, I have made a $360,000 worth of options trades. Wow, he's been busy. And have managed to garner a 16% annual return. He says, I primarily trade covered calls, cash secured puts, and spreads. As a part of my overall strategy, I sometimes plan on assignments rather than rolling a position. Yeah, that makes a lot of sense. Sometimes people want to put on stock positions using short puts, or maybe they want to kick off a wheel trade. A lot of reasons why you might want assignment. He says, however, I had a situation this past week when an expected assignment did not happen. I had two 41 strike cash secured puts in GDXJ. I'm not familiar with this one, listeners. This is the Van Eck Junior Gold Miners ETF. Trading right before showtime, right around $42.50. Looks like it had a bit of a rough year, off about 30% or nearly 20 handles on the year, about 19. So yeah, a rough run here for the Van Eck Gold Miners ETF here. He says, GDXJ closed. These were expiring on the 10th. So he had two short 41 strike puts in GDXJ expiring on the 10th of September. The stock closed at $40.91. So he was expecting to be assigned 200 shares of GDXJ, as you would. He said, instead, the options simply expired. He said, this is confusing to me. I thought that options, a penny in the money, were automatically assigned. Can you explain to me why these options were not assigned? Thanks for your insight. Well, yeah, there's a lot to unpack here in this very basic. I'll do a quick overview, then I want to get your thoughts here, Dan, as well. He is correct. The exercise threshold, what we deem the automatic exercise threshold, is 1 penny. So if your option expires 1 penny in the money, then you should reasonably expect to see your options automatically assigned. This is the language that OCC uses to describe this process. They say, to ensure fairness in the distribution of equity and index option assignments, OCC utilizes a random procedure to assign exercise notices to clearing member accounts maintained with the OCC, aka your broker. This assigned firm must then use an exchange-approved method. They put in parentheses here, usually a random process or the first in, first out method, to allocate notices to its accounts that are short options. You also put an interesting caveat in here. They say only about 7% of options are actually exercised. And they say this percentage hasn't really changed over time since OCC has been tracking it. That means only about 7% of options are really held through expiration. Most people close them out before then. So something to keep in mind out there. Doesn't mean you can only get hit on 7% of your position, but it is something to keep in mind out there. They also say, for a lot of reasons that, go along with psychology, people are more likely to exercise a put that goes in the money versus a call, because one actually gets them some proceeds for their account versus one requires an outlay to buy the stock. So they also see a bit of a divergence in exercising puts versus calls. And they also point out there are times when people choose not to exercise, and I do believe this is probably what you encountered. But Dan, I'm curious for your thoughts in general on the automatic exercise process, maybe any interesting nuggets or tidbits you want to share. Maybe mentees come to you at MTM and they're a little bit confused about it. How do you walk them through this process? And then in particular, if you have anything you want to share here for JFO 363, he's confused why his 2-lot of the Van Eck Gold Miners ETF was not exercised, sir. Have at it.
Yeah. So this is a situation that happens really just every now and then. And I would say maybe if it happens once every couple of years to a trader, it's, that's frequent. So you're 100% right on. If an option is in the money by more than a penny, the Options Clearing Corporation will automatically exercise it. And thus, if you're short it, you should generally expect to be automatically assigned. Now, that said, it is an option. The holder of that option does have the right to exercise or not. And so if they don't want to exercise an option that's in the money, they can fill out with their broker what's called a contrary exercise advice form, or basically just call them up and say, hey, this is in the money. I don't want to exercise it. And there's a couple of reasons why that might happen. I can think of two off the cuff. One is market makers every now and then might not exercise because maybe, if they're long, well, let's see, this was puts, right? So if they're long puts, maybe they didn't buy enough stock to hedge. And so if they exercised all their puts, they would end up coming in Monday with a short delta position, which they hate to do. Market makers hate that. They like to be delta neutral coming in Monday morning. So they might say, hey, I'm only going to exercise 67 of my 83 puts. So that's one reason. Now, the other one might be, maybe the stock is changing direction after the close, right? Maybe the stock closed and the market makers who are long these puts see that the stock is going up. And so they own stock as a hedge against those puts. And they figure, hey, you know what? The stock is going up. I can just sell it in aftermarket. I'm not going to exercise these. And I'm going to sell the stock that I bought at a hedge. I'm going to sell it at a higher price and just not exercise my puts. I'm okay losing it looks like 9 cents was what they would leave on the table. And individuals can make that decision too. If the stock is going up, you might not want to be short.
Yeah, that seems like what you encountered here, JFO 363. And Dan's right. It is an extremely rare occurrence. And I did actually go look it up for you. And on the 10th, so on your expiration day, those 41 puts had less than 1,000 contracts open, only 989 contracts. So you're not talking about, let's say, an Apple at the money or out of the money put. It has couple 100,000 contracts open. There's less than 1,000 contracts. It's possible that was only one customer who had all that on, or maybe only a handful of customers. And one of them elected to say, hey, I don't want to exercise these puts. And it could be for a number of reasons. As Dan pointed out, it could be because they saw the stock turning. The stock has rallied. It's only been 5 days, and the stock has rallied from a little bit shy of 41 up to about 42.5 right now. So it could be they saw the worm turning after the close there. For a number of other reasons, they chose not to exercise. And so you were the beneficiary of their lack of willingness to exercise. Your 2 lots went into the ether, never to be seen again. It sounds like you wanted the stock. In this case, yeah, you missed out on, looks like about $1.50, $1.60 in the stock as a result. So that's unfortunate. But that's just the lottery, the crapshoot that is sometimes expiration. I should put it out to most of our listeners who are out there saying, I didn't know I could not exercise my puts. Most brokers will make you take a proactive step in order to do this. Because as we said, otherwise they will be automatically exercised if they're a penny in the money. Most brokers, you can't do this on the website. You have to call them up and say, hey, I have this position. I don't want it to be exercised, even if it goes in the money, because they want to explain to you, hey, this is what you're leaving on the table if you do this. So they want to make sure you know what you're doing. So that's probably what happened here. Mr. JFO, not a very liquid option to begin with. The handful of customers that are on that strike going into expiration, one of them, or maybe two if they had 1 lots, decided not to exercise. So this is not something you can rely on. You can't go in selling a bunch of puts or calls, whatever it is, and expect them not to be assigned when all the chickens come home to roost here after expiration. This is a very rare occurrence. So don't take this as something you can rely on in your trading. But every once in a while, this can happen to you, listeners. If you're trading a lot of options, you will see it. And so at least now it won't be as mysterious to you out there. As we keep on rolling, you know, it also is a mystery to us sometimes is what you guys think on all these crazy topics. So let's get into a little bit of your mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call. We got Nichols in the pro chat saying, I wish my puts would be forgotten. Yeah, I think we all sometimes feel that way, particularly if you got some short puts that are maybe a little bit more against you than just 9 cents. Oh, they got magically forgotten. That would be nice. It tends not to happen when they're pretty badly against you. Usually it's this kind of thing, hovering around the strike and maybe some other things going on to complicate things and gum up the works. You know, Dan, you're super hardcore about the meme stocks these days. I thought our audience was as well. We put out a poll to them last week. We said we've seen so many hot meme stocks explode onto the radar in recent months. Quite simply, which of these names has found its way into your options trading account lately? Don't see your favorite? You can always hit us up. A lot of you wrote in with write-ins for BBig, so I guess we should have included them on our meme list. Instead, we had Support, so SPRT. We had Any. We had CCJ, which is, of course, the hottest uranium name coming out of Canada there. And, of course, Clover Health there. Those were our 4 names. Dan, do any of those resonate to you, and which do you think our audience picked?
Yeah, I think all of those resonate with me. They're all a whole bunch of stocks that I've been watching for a while here. I am going to go with I would say SPRT. I think I would go with SPRT. And I have the benefit of looking to see here what the audience picked, I think. Right?
Yes, you do.
Isn't it?
You do have the benefit. Yes, you can't cheat. Yeah. I was testing your integrity, and you failed, sir. That's why I call you the black-headed one. But yes, CCJ did win with about exactly a third, 33.3% of you choosing good old uranium. Not surprising. CCJ has been kind of on our options oddities radar a lot lately. A lot of you have been looking at the uranium space. We've also got Any was actually, you take it back. Clover Health was number 2 with 27.8%, followed by Any, number 3, 22.2%. No love for Support, only 16.7%. And I guess, judging by your write-ins, we should have had BBig on there because that one probably might have won, given your interest. A lot of you also chimed in with what Bicyclist said, saying, I have them all. So there you go. It's either I have them all or I wanted BBig. Those were the write-ins we got the most. But this week, Dan, our question of the week this week is a Passarelli special. It is right up your alley. We asked folks this week, you said, let's get reductive. Let's boil things down to brass tacks. You know, the Greeks should inform every aspect of your options trading, but in practice, traders tend to focus on different Greeks depending on their trading style or their position or that sort of thing. So we thought we'd ask you this week, quite simply, which Greek do you use the most in your options trading? Gave you the obvious 4 choices, Delta, Gamma, Theta, or Vega. We said we will accept no write-ins for Rho. Uncle Mike, our buddy from the option block, he took umbrage to that, and he wrote in Rho all the way, so he wants Rho. So outside of your Rho write-in here, Dan, which I'm sure you probably take umbrage to as well, what do you think our audience is voting for, sir? And also, do you have a choice? Have at it. You're the guy who wrote the book on the Greeks, after all.
Well, Uncle Mike the Welcher wrote in Rho.
Oh, that's true. That? He still owes you money, doesn't he? Yes, yeah. I forgot.
I wonder how time affects the amount of money that he hasn't paid me that he owes me.
Yeah, what's the Rho on that dollar, sir? That's getting back a ways now. It's gonna give you at least $1.02.
Yeah. Well, you know, I mean, clearly, I think that Delta has the biggest impact on a typical option trader. All of them are important to varying degrees, especially Delta. Well, I mean, I would rank them. I would say Delta, Theta, and then Vega. But, you know, that's not universally true. With, like, for example, our total earnings domination trades, Vega is actually the most important. Theta barely even comes into play. Gamma would be the second most important one there. So, it depends on the exact type of trade, your trading style. But I would say for a typical trader on average, and even for my trades typically, it would be Delta first and then Theta and then Vega.
Yeah, I kind of expected something similar there. I expected our audience to mostly say Delta because a lot of retail still is very directionally focused. And the other portion of you are very very, very aggressive about getting and harvesting your time decay. So I thought Theta would also be a popular one. Vega obviously informs all your options trading, whether you realize it or not. Some people really don't realize it, I don't think. So that's why I thought it would come in pretty much third, and it is. And I knew Gamma would be bringing up the rare because Gamma is kind of that mystery Greek. People don't really have a good handle on it. Even though if you're focusing a lot on Delta, Gamma is obviously very important. So there's no way that any of these Greeks really operate independently. But still, that's why we called it a reductive poll this week, listeners. And you're right, Delta is winning with slightly over half of the vote, 52.6% right now, followed by Theta, number 2, 24.6%. So it's pretty much playing out exactly the way we expected. It's actually a closer fight between Vega and Gamma than I thought, Dan. It's 12.5% for Vega and only 10.5% for Gamma. I thought Gamma would be like 0.5%. I thought no one would vote for it. So I'm surprised Gamma got as much love as we are. It shows, Dan, we have a very sophisticated audience, or at least we do on Twitter.
Yeah, that is pretty interesting and pretty cool. Yeah, that does say a little bit about the sophistication of our beloved listeners.
This poll has clearly resonated with a lot of you. A lot of people chiming in. The notorious PIF said, I had to double check to make sure this wasn't a new COVID variant you were talking about. Yeah, a lot of people had similar thoughts around, oh my God, what is this? Is this new COVID? We didn't mean to alarm anyone. We probably should have put a trigger warning on this poll. That's the age we're living in. Speaking of ages, Age of Delaquarius, that's a heck of a handle, says, I wish I could go back to the days when I only thought of Delta as a rate of change. Yeah, I'm with you there. He also says he's on Team Theta. So even though he's talking about Delta, he's a Theta boy. Then we got Larry Williamson says he's in for Vega. That's if you trade volatility, the stuff that I personally love. And secondly, all traders have to, at one point, deal with Delta to hedge their options positions. And he put hashtag love this stuff. So yeah, he loves himself a little bit of Greek. So yeah, there's a lot of ways you could construe this. People they have very strong devotions to one Greek or the other. And it's been fun to see that play out here. If you haven't voted yet, you got, let's see, I think till the end of the week. So at options over there on Twitter to make your voice heard in the question of the week. If you're on demand, that gives you a little bit of time to get in there as well and play along. All right, next up, let's go back to the memes, Dan. Marcus wants to know. This is a trade I know you were doing a few months ago. I'm not sure so much anymore. But he says, is there any way to repeatedly sell the AMC 145 calls at these ridiculous prices without having the stock or an in-the-money call position against them? Dan, you railed about this maybe a month and a half ago, maybe 2 months ago on the show about how these calls were so crazy juicy, and yet the firms wised up to this and they started really jacking up the margin requirements just blast away, even at a seemingly unlikely strike like the 145. So I know you kind of backed away from this trade, Dan. Any advice here for Marcus, who's clearly looking to still get into it?
Yeah, I mean, it's tricky, man. It's tricky. Selling the 145 calls just plain naked is like a totally logical play. And I almost never talk about selling naked calls, but it's a totally logical play, except that there's an added layer of risk that your broker can, I'll use the phrase screw you over, but like I do understand why they do it, and it's not to screw you over. It's just to manage risk, and they're, maybe being a little skittish, a little crazy about it, I think. But, I can't really fault them for it. Definitely giving them the benefit of the doubt that they're acting in a responsible risk management sort of way. But you can get kind of hosed if they jack up the margin because they get nervous that the stock might be rising. So it could be a risk worth taking, but just be prepared and don't go full out in such a way where if they multiply your margin times 10, which could happen, that you're forced into a situation where you have to close at a higher price because they're forcing you to close. So yeah, I like the naked call. And normally I would say do a call credit spread, but the last I looked, there wasn't a strike above 145. So yeah, I mean, that's pretty much your only choice. Just recognize there's greater reward, but there's greater risk.
That's just emblematic of where we are still in this new paradigm of the meme stocks, where guys I know like you Dan and even, Matt Amberson over there who've railed for years against net short units are even selling wings, because it's so ridiculous, the era that we're in right now. The 145s have calmed down quite a bit, but they still are very active. In fact, we talk about them a lot on our Options Oddities program. Again, check out the Pro if you want to learn more about that, listeners. And they are still dominating. I think they are somewhere around 60% of the top 5 open interest positions in AMC options right now are 145 strike calls. So they still are out there for size. Yeah, and Marcus, unfortunately, you can't, as Dan said, you can't spread it off. There's no strike above it that you could buy. And if you did, if they had it, it'd probably be close to a similar price. As we said before, these options are kind of ridiculous, and everything on the upper end of that chain is kind of ridiculous. So at the end of the day, like Dan said, you have to go naked, and you have to be willing to tie up a lot of capital to do that, which is maybe more of your portfolio than you really reasonably want to allocate to selling AMC 145 calls, or you have to have something else long against it, whether it's some calls, maybe 1-to-1, maybe on a ratio, maybe some stock. You have to have something else. That's really, there's no other really way around it. Unfortunately, there is no free lunch here. Dan, it seems like people have just market makers and hedging and gamma on the brain. Now, this name sounds familiar. This is Chinggis. This is our Genghis Khan friend over there. Chinggis Akatayev, I believe, if I'm pronouncing that correct, which I do believe he wrote in and said I did get it right last time. He says, "Hello, gentlemen. It's me again with some questions." So polite, our audience. He says, "I have come across gamma exposure and trying to learn as much as I can on this topic. I am particularly interested in the SPX index. Can you please explain what market makers do when they have to hedge their position depending on the underlying? How do they hedge if there is no stock, only options like in the SPX? How do those pivot points where market makers have to start hedging, how do those pivot points where market makers have to start hedging, how can they be used to trade? Any other insight will be helpful, and maybe some pointers where I can read more about it in greater detail with simple explanations. Thank you in advance." Well, you can. I used to trade out in the SPX. That's where I kind of cut my teeth in the market making business there, Chinggis, before it's gone through its multiple explosions and iterations out there. And yeah, there is no SPX index per se that you can go out and pick up, but there are the S&P futures, and that's where you're getting all your delta hedging from. So, and then you put on a trade in there, you're going to trade the S&P futures against it. So that is your primary delta hedging mechanism that the market makers are using. And now you're right, it doesn't line up 1-to-1. That's why you see all this roll activity and everything else going on in the SPX to keep those deltas. You don't want to have your hedge go away and have the option position still on. That's the challenge of having an expiration date on your hedge and on the option itself, unlike with a stock. So there are some moving parts to that make it a little bit more complicated, but they do use the underlying to hedge there. It's just the S&P future, or these days the E-minis now, really. That's the big one out there. But Dan, any thoughts about the SPX in general, or maybe also just thoughts about market makers and hedging? Again, this question comes up a lot. People clearly have it on the brain. Have you found a way to trade around, as he puts it, those pivot points in an underlying, sir?
Yeah, I mean, if it's specifically about the SPX, yeah, Mark's definitely your guy. He traded out there for a while, and it's the E-minis I think they typically use in the SPX, right?
Yeah, it's E-minis now. I was funny. I was out there when the E-minis first came on and Globex came on. I guess I'm dating myself now. I used to have a limit of like 20, I think, as most you could do in the E-minis, because they didn't want to cannibalize the big few. And of course, now all the big stuff's gone the way of the dodo, and it's all E-minis. So yeah, they do use E-minis now.
Yeah, but yeah, and I think that this is probably just more like an educational question. Like, I think a typical person who's listening to this podcast isn't going to be trading SPX delta neutral or probably really any stock, any individual equity delta neutral either. But I teach a class on this to my retail traders because I think that it's really important to understand how market makers trade, because when you do, you're able to get better fills because you know what they're looking for, what they're thinking, why they're thinking it, and that just makes you win that little game that you're competing against the market makers. And really, just as an aside, you're only competing against the market makers for the bid-ask spread, right? Like if you buy calls and Apple goes up, $20, the market maker didn't lose $20. He's delta neutral, but you did make $20. So it's not really a zero sum game from that perspective. But you are battling the market maker for that bid ask spread, for that slippage. And the more you understand about this stuff, the more you can do better in that battle.
So again, this is a topic that comes up quite a bit. I mean, we have touched on it many times in the past. I encourage anyone who has issues or questions about gamma and market makers' usage of it and how they impact it from a hedging perspective. Check out our archives. It has popped up many times, particularly in the last year or so. It seems like that's a question a lot of you have on the brain. And in general, what you're going to see there, Chinggis and everybody else, of course, is if they have an underlying where they can't, delta hedge, or maybe they do, they're getting, let's say the market makers are getting overloaded on upside calls. The market's just crushing them. They're just dumping calls on them left and right. Market makers are buying them and buying them. What will you see? They want to obviously unload some of those. So you're going to see that wing of the skew come in dramatically, so they can incentivize customers to come in and actually start buying them again, and they can unload some of those that they have on their books. You'll see a lot of this also reflected in the skew and the volatility levels as a result. That's a direct result of what inventory the market makers have and how they're looking to deal with it. So that's the most prominent and most immediate impact you will see of this, rather than just the delta hedging and trying to scalp around that trying to measure some of the market makers' delta hedging. But we can go into this, kind of came in late in the show, but we can maybe go into this again in more detail. It seems like a lot of you have this on the brain. There's variations of this. We talked about Max Payne and other things like this. People tend to ascribe a lot of magical properties to options that aren't always there, but sometimes they can rear their ugly heads. Like we have Mr. Unlimited here in the chat. He's talking about he's excited for quad witching coming up here on Friday, which again, I forgot it because I don't really pay much attention to those anymore. But to certain people, that still holds a little bit of a magical resonance to it. So on times like that, when multiple things are expiring at once, you can see some funky things happen. So it might be worth exploring this again in a future episode, because clearly you folks have this on the brain. But Dan, we got to get out of here. The music's playing us home, sir. But before we go, if folks have questions, maybe they're like Chinggis, they want to check out that course you're doing, or just hit you up with questions, where should they go? What should they do?
Yeah, I've got a free course, man. I've got a free webinar tomorrow night. I should say complimentary, because I sure don't want you to think that it has no value because it's free. It has tons of value. It's going to help you to get started in trading some of these short squeeze opportunities. And all you have to do is go over to markettaker.com. That's market like stock market, taker like take what is rightfully yours, 2 T's in a row. markettaker.com/SQ Sam Queen, or what is it, Sierra Queen? I always forget what the phonetic alphabet is. Short for squeeze, I guess. markettaker.com/SQ and register for this complimentary webinar. We'd love to have you attend and give a shout out while you're there that you're a boot camp listener.
Let's just go with Sierra Quotidian. How's that? Sounds good to me. SQ. I like it. Check it out. Market Taker. Don't forget the second T. Leave on that second T for Theta, of course. And don't forget, speaking of Theta, vote in our polls. Keep those questions coming. We'd love to hear from all of you. If you want to check out all the craziness we have going on, the oddities, the pro Q&As, again, next week's going to be enough. We have had a lot of super special pro Q&As. Those have really been fun. So if you have missed those, you want to check out the ones we've already done and participate in future ones, theoptionsinsider.com/pro is the place to go. And we got to go on out of here, but we'll be back later today with more education. Brian will be holding court over there on Options Playbook Radio. Again, if you're not listening to that show, it goes hand in hand with Options Bootcamp, very much a sister program to this, and we'll take you through options from A to Z. So a lot to check out there. If you're only listening to the Options Bootcamp feed, you're missing out. Go subscribe to the full network. That'll get you OPR and a whole bunch more. Back again next Education Wednesday, another episode of Options Bootcamp. We'll see you then.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.